I'd like to get into the real estate market, but the problem I'm having is, with the PMI, which is private mortgage insurance, and MIP, mortgage insurance premium. I always call that mafia. It's like that insurance you have to pay for if you don't put 20% down.
No money.
So
no
I think when I got my first home, it was taught to me that you need to have skin in the game. So you got to put 20% down. But is that really true nowadays, Dom?
No, that's not the case. There's, FHA, you've probably heard of those loans, FHA, conventional. And with both of these loan types, there's actually programs with local lenders where you can put as little as 3% down, 3.5% down.
Yeah, but why would I want to do that?
It's all dependent on how much money do you have in the bank, how much do you want to put down. With being a homeowner, the buck stops at your door. So you want to think about, well, it'd be good to keep a little hunk of money just in case, maybe
Safety,
your AC needs some work or
emergency
some help.
fund.
Mm-hmm.
Yeah, but Zev, this private mortgage insurance. So
Yeah.
my understanding is if you put 20% down, then you don't have to pay that insurance. That really doesn't do anything, but if you default on your loan,
Correct.
the lender makes some money, but you still lose your home.
Correct.
So I always hear people say, well, we're not ready to just buy with 3 or 4 or 5% down because we don't want to pay that premium. So aren't there loan programs out there where I could just have a 1/8% more of an interest rate and not pay any of that? And with the appreciation, tell me what would be the benefit of dipping my toe into the real estate market sooner rather than later if you and your family are ready for it or your loved ones.
Yeah, so there's so many cool, neat programs out there, basically with the whole purpose of helping people get off the sideline and into a house. Because what I find, and I feel like we've all heard this conversation a lot, is I'm waiting to see prices to come down or rates to alleviate. What happens is they sat out of the market for a year, the market appreciated 5%, all of a sudden that house that was 400,000 is now higher. So it's really frustrating because they feel like they're doing what's in their best interest and it ends up kicking them in their own butt. So the
what do
cool
you
part
think?
is Don, we had a class recently about a program similar to this.
Yeah, tell us about
Right,
the
so there's
programs.
some unique local programs that allow you to borrow, a certain percent of whatever your income would be, and it only makes you put $500 down. The lender pays, the closing costs. A lot of them even have a $2,500 down payment assistance, so it's kind of like a grant you get that you don't have to repay either. So a lot of these programs you have to stay in the house for 5 years or so.
Wow.
And, yeah, it's.
But here's the question, I don't know about these programs. If I was watching you right now, I'm just sitting on the sidelines for another year or so until I can save 20%. But you're telling me there's programs out there that people don't even really know about, except for these experts. And why we think that's important for you to know is because how most people build wealth in America is by having home ownership over the course of time. So let's say if the average appreciation is 5% a year, the sooner you dip your toe into the arena, the sooner you start paying down your debt and paying down your mortgage and building wealth. So I would reach out to Dom or Zev to find out about these programs. We know of many programs because we're dialed into that part of it. We would like you to be dialed in too. So Dom, how do we reach?
Yeah, call or text me 330-234-6204.
330-933-3258.
Or 330-418-1535. Call or text anytime. If you want to know more about this or any of the other programs, check out our more than 500 5-star reviews at DominicFonte.com.